of Commerce from Kanganadu Arts and Science College, Coimbatore. First of all, I would like to grace this opportunity to welcome you, ma'am. Under a very short time, you have spared your valuable time to address the students about this today topics, that is on legal structures and how it has to be initiated for the startups. A brief overview of Professor B. Divya Priya. She's having an experience of around 14 years of teaching and research, and she has already authored 32 research papers on marketing, banking, insurance, and finance, which have been published in national and international journals. She has been the author of a book, Strategic Management, and we are very pleased to announce that she also received an Excellence Award for the professional expertise which she contributed during the 4th International Scientific E-Conference on Global Education, Research and Technology for Sustainable Development. She has been the Young Researcher Award from INSC and has also got Excellence in Teaching Award from WBN, that is Women Business Network India. She is also a research supervisor for guiding the MPhil and PhD scholars at Bharatiya University, Coimbatore. She has already given her supervision to 10 MPhil students and undergoing 2 PhD students. Her research of interest includes social marketing, green marketing, microfinance, and insurance, along with entrepreneurship development. So we are very pleased to have you, ma'am, today on this platform. And now I would like to request our Honorable Director, sir, Dr. S.S. Tyagi, sir, who is available with us today, to please address the gathering, sir. Over to you, sir, Dr. S.S. Tyagi, sir. Dr. Tyagi, sir, am I audible to you?
Yes, yes.
Yes, sir.
Thank you, Dr. Naveen. It's my pleasure to be here that Dr. B. Divya Priya is there for our faculty members and students to make awareness about the legal structures and ethical steps in establishing startups. It's a very important thing nowadays because startups are playing a key role in development of an institution, of students and faculty as well. So it will be good to have Dr. B. Divya Priya, who is an innovation ambassador, Ministry of Education, and also a startup activity coordinator. So I welcome Dr. B. Divya Priya and also all the participants in this webinar. So hopefully they all will get benefited out of it and will understand what the legal aspects of the startups and other taxation schemes or whatever, which are some of the people are not aware, or I should say most of the people are not aware what the legal structures are there and how the ethical way we have to move into these startups. So I welcome again and all the participants, and thanks Dr. Naveen Rathi, Dr. Saswat Das, all these people, R&D team, who are taking initiative to do all these kind of activities and taking help from IIC and MHRD and all these people. So thank you very much once again, and thank you, Dr. Divya Priya, to be here today. Thank you very much, and please, you can start now.
Thank you so much, sir. Thank you so much for your blessings. Now may I request our session chair, Dr. B. Divya Priya, to please start the session now. Over to you, ma'am.
Good noon to all. And first of all, I thank Dr. Naveen Rathi sir and IIC Tyagi sir for giving a wonderful introduction and welcoming with beautiful words. And thank you so much for that. And today's session is on legal structure and ethical steps in establishing startups. Can anyone inside this room can you tell the meaning of the term business, entrepreneurship, and startup? There are some differences among these terms which one has to be very clear, and I hope it was going on live.
Yes,
Okay,
ma'am.
I will just start up the session and then I will clarify all your doubts at the end of the session. So business is an intention, is an activity that is associated with the aim of making profit and higher the risk. And any person who is ready to undertake risk with the aim of making profit can be called as a businessman. For example, if your grandfather is selling mangoes in the market in a basket, he will be called as a businessman since he has to come across the seasons for and other natural disasters and those kind of risk he has to face. And among that, if he aims at making profit, then he will be called as a businessman. Entrepreneurship is the same. Uh, um, if the next generation sells the same mangoes, which is full of juicy, or else if he started selling under a roof, he will be called as an entrepreneurship. And startup is a newly established company with no marketplace for their products. So for startups, usually many startup companies are failing because lack of business model. And business model is very important for each and every startup. So business model, when we come to business model, we have to concentrate on two sides. One is demand based and the other one is supply side. So demand based is fully focusing on customers, whereas the supply side we focus on key partners. That is who is going to invest for your organization and who are the members responsible to bring products, to bring raw materials for your organization, and how you are going to give your products to your customers. What are the production process involved in manufacturing? And what is the cost of production? These are all the things included in the supply side of business model, and it has 9 key indicators, performance indicators. When it comes to demand side, you have to focus on customers. How you are going to reach your customers. That is very important. So the foremost thing, it was said as before releasing the final product to the consumers, it is very important to check whether the product is, whether the customers is ready to buy your products. So only if the customers are ready to buy your products, you can make sale of your products, or else he will not buy your products if the product doesn't satisfy his requirements. So it is the basic thing one has to understand. And there is a concept called minimum viable product, which is selling the product to the customers with only minimum basic features. And after then, you can go for adding some more features. So you have to go for testing minimum viable products. So what are the changes customers likes to acquire at this stage of minimum viable products? You can bring those kind of changes to your products and make the sale to your customers. So when coming to legal structures of business, okay, this is very important. After deciding what you're going to sell and who are the key partners, everything, and you have to go for deciding the nature of the firm. Just share my screen. Is my screen visible to you all? Okay, this is
It is visible, ma'am.
institutions. Okay, sir. Institutions Innovation Council's session on legal structure and ethical steps in establishing startups. So how to start a firm? First and foremost thing is to create a business plan. Business plan should include long-term plan as well as short-term plan. So business plan will focusing on long-term results and short-term requirements. So when you draft a business plan, you have to consider all aspects of business. What are the aspects and what are the functions of business? And what are the goals of business? What are your vision, mission, to accomplish those goals, and whether the plan is efficient or not, and then only you can go for next step. That is first to create business plan. Business plan is drafting a rough copy of what is going to be done in your business. So the focus is on the main functions of business, it always includes human resources. Next is marketing, next is strategic, and next one is organization. So the way you take your organization to. So when it comes for human resources, they are the most important assets for any organization. And without human resources, your business cannot survive. And for success of any organization, it depends on effective and efficient human resources that need skill. Skill is required in each human. So you have to concentrate on human power for your organization. Next is finance. And so each and every business, irrespective of their size and nature, need finance to run their organization. So finance is called as the lifeblood of any business, since finance is the main source, and it helps in functioning of other functions like human resources. For payment of salaries, you need finance. So finance, when it comes to finance, you need finance for meeting two requirements. One is long-term requirement, the other one is short-term requirement. Long-term requirement is nothing but long-term funds, which can be called as fixed capital, and the short-term funds which aim at meeting day-to-day operations, which is called as working capital, and these working capital includes debtors, creditors, bills receivable, bills payable, etc. And when it comes to fixed capital, how you are going to raise your fixed capital? Fixed capital is the amount of investment you made to acquire long-term capital assets for your organization. And how to raise? There are various sources of finance for raising such kind of capital. And one is issue of shares by calling the general public, to subscribe for shares in your company. The other one is issue of debentures. Debentures are no one but the outsiders who can offer funds at a fixed rate of interest. And the other one is plowing back of profit. In case of existing firms, you can check on your earnings, whether if there is sufficient earnings, you can redeem back to your organization. So business plan, while drafting business plan, finance plays a vital role in every aspects of in every functional aspects. In every functional aspects. Next comes identification of key metrics. What are the key metrics of your organization? So it always have a 9 key metrics. So when it comes to 9 key metrics, it includes what are the performance indicators for your organization, for betterment of your organization. And the last one is you have to go for selecting this correct legal structure for your business. So what kind of business you're doing and what is the legal structure you're going to do. So based on the number of persons, you can go for framing legal structure. So what are the deciding factors? So when it comes to structures, various legal structures, and structure of the firm can be classified into two groups. One is unregistered structure, the other one is registered structure. Unregistered structure covers sole proprietor and partnership firm, whereas registered structure covers limited liability partnership company, and company may be private limited company or public limited company. For under unregistered structure, sole proprietor is one who solely manages and controls the working of the enterprise. He is solely responsible. He is the one person who has taken risk, and he is the one person who is going to enjoy the benefit gained over the amount invested exclusively by him. Partnership firm is when 2 or more persons agreed and joined together to form a business with the aim of sharing profit in an agreed ratio. And when it comes to registered structure, limited liability partnership and company. So under partnership firm, the liability of the partners is unlimited. But in case of limited liability firm, it has to be get registered under Ministry of Corporate Affairs. And just like a company, it has to obtain the certificate of incorporation, whereas it is not necessary in case if it is a partnership firm. So next is company. Company is an entity, it's a legal entity that have a common seal with perpetual succession, and it goes forever. That's it. And company can be divided into private limited company and public limited company. Next is, what are the deciding factors to choose over the right legal structures? One thing is tax benefits. So you have to, among the four legal structures, you have to choose wisely where you can get, where you can claim more tax exemptions and tax benefits. Next is team structure. So is the only one who is going to look into the affairs of the company, or else that will be, is there any other person who is going to take care of the company? That determines the structure of the company. So team is very important. So what is there only one founder, or you can go for co-founders? And what is the future plan of the organization? In case of future plan, if you want to expand or modernize, definitely you have to go for structured legalship. Next is potential liabilities. Whether you have capability, you have enough capability to meet the liability of outsiders or to raise loans. And residential status. This is because of FEMA rules and regulations. It has become mandatory to check whether whether the person who has started up a company or who has started up an organization to have a residential status. The residential status determines whether he is a resident of India or not by satisfying two basic conditions, and there are two more additional conditions. So basic condition is he has to live in India for 182 days or more in a current previous year, and he has to be a resident in India for 730 days out of or uh, before the preceding financial year, and 9 out of 10 years. So why to incorporate? Why there is a necessity for incorporating us? For branding of business, each and every business have to get branded. Only if the business is branded, people will come to know about you and your organization. So business branding is very important. So in order to brand your business, you have to go for incorporating your company under law. So incorporation of legal entity is very important to separate out income and expenditure of business from personal expense. That is, if you want to separate income and expenditure of business from personal, you have to go for the incorporation of a company. You can have a separate legal entity concept, which is the most important important accounting concept in a business. So you can have a separate income and expenditure statement relating to business. And in case if you want to go for addition of co-founders, then you should go for incorporating your organization. And team is key to run business. So sharing of profit with team in the form of ASOP is the important aspect. That is, employee stock option is very important when it comes to, if you want to share your profitability among your team. And for investment and exit, legal entity is must, because you're liable for answering all your stakeholders for their investment made in your organization and the reason for exit out of that. So everything, if it is legally proceeded, then you can then all the tasks can be made easier. So when is the right time to incorporate? Purely it depends upon business requirements. So if the business needs finance, long-term finance, and if you want to raise in the form by issue of securities, by issue of shares or debentures, definitely you should go for incorporation of your organization. So incorporation will help you to raise up funds. Next is, you have to decide on financial structure, how much funds is required and what kind of funds will be required, and revenue expectation. So what is the expectation of revenue? Expectation of sales for your organization. Yes, and it is best time to incorporate is just having proof of concept after getting ready with your product. So when to incorporate the same is purely depending upon business requirements. If your product is ready and if your customers is ready to is expressing their willingness to buy your product, then your company, then your organization is ready to go for incorporation. So you can go for incorporation and obtain the certificate of incorporation for commencing your business. And then you have to decide how much funds and what kind of funds will be required. So how much fund is required is the most important, and what are the source of raising funds becomes under the ways of raising funds is also, and acquisition of funds, how much you are going to allocate for each and every assets of your organization. That is also is a very important thing when you go for incorporation. So how to incorporate? So incorporation is just by identifying your brand name and legal entity name. This may be same or may be different, and single entity may have multiple brands as well. So identifying brand name is very important. So you can have a product, you can have a company, or you can have an organization with different legal entity name. You can name it different, and your product can have a different name. And it doesn't matter. And single entity, so one entity may have multiple brands as well. For example, if you go for Hindustan Lever Company, you can see multiple brands of them, multiple brands selling soaps, detergents, powder, etc. And you have to go for checking trademark for brand name. So before giving brand name, you have to check trademark, because if once someone has obtained the trademark, you cannot have this same trademark for your products. You have to go for different. So you have to check whether there exists any form of trademarks and legal name. And legal name you're going to give up for your business. Next is document rules and responsibilities of founding team. So who are the founders? Who are the co-founders? What are the rules and responsibilities? Have to be checked off, and select the right entity according to your business. So after then you have to go for checking which one suits you, which one of the legal structure suits you, whether structured relation, registered structure or unregistered structure. So there are two forms of organization under registered structure and two in unregistered structure. So you have to go for choosing over the right entity that matches your business. Next is, so complaints. What are the statutory complaints applicable on business? So first thing is, when you go for business, for any business, without making sale, whether it produces product or runs a service, that doesn't matter. It is aimed at selling. Only after selling, they can make a profit. So out of profit, they are liable to pay GST, goods and service tax to the government. So first and foremost, complaints applicable on businesses sales, which is under the coverage of goods and service tax. Next is payroll. Payroll is all about labor and human resources present in your organization. So you have to go for labor complaints, and in case of any tax directed at source, you have to put forward to the government then and there. Other expenditure. So other expenditure that may have tax deducted at source. Finally, it comes to net profit, which is the income tax, where you can raise your you will be able to generate profit after making sales. So these are the three important complaints applicable on business. The most important complaints. First is goods and service tax. Next is labor complaints and tax deducted at source applicable. And number three is tax deducted at source. And finally, you can make profit. And out of that profit, you're liable to pay income tax to the government. So, as I told you before, there are two kinds of legal structures. One is structure of business. One is registered structure. The other one is unregistered structure. When it comes to unregistered structure, we saw about sole proprietorship and partnership firm. So sole proprietorship is a single man army. It is a single man show. That's why he is named as sole. Any sole person comes forward, runs a business with the aim of making profit with little risk, he will be called as a sole proprietorship. And what are the major advantage of sole proprietorship is ownership is solely owned by an individual. There are no co-founders or there are no partners for him. as it is as the only one owner, and ultimate control over sole proprietorship is within the hands of that person, is vested in the hands of that person. And business owner has a power to control over the business person. Only he has the entire control over the activities of each and every task performed in the organization. And he has the risk is taken by one person. He is the one person who will be sharing over all the profits, who will be who will receive all the profits, and he is the only person who has to suffer loss in case if the organization compass loss. And under sole proprietorship, it is easy to set up because there is no partnership agreement to be created and other company documents to be created. So sole proprietorship becomes easy to set up. Next is, what are the disadvantages of sole proprietorship? Is owner and business is the same and they act as the same entity. There is no separation. Since there is no separation, there will not be any kind of income and expenditure statement recorded over. So that failure of income and expenditure statement unrecording will lead to so much of will bring so much collapse to the organization. So one has to check over that. Next is unlimited liability, not restricted to the capital of the legal entity. So in case of company or limited liability partnership, there is a statutory capital and authorized and statutory capital that the company should not go beyond that beyond for raising the capital. But in case of sole proprietorship, there is no limitations over capital. He can raise the amount of funds which is required. So unlimited liability. In case if he is not able to make profit, he is the only person who has to suffer the loss also. And it is not he cannot add another founder in business. So since it is a sole proprietorship, adding another person becomes a difficult task. Next is, what are the complaints? What are the statutory requirements under sole proprietorship? That is, there is no separate income tax. So he need not file separately for organization's profitability, profit sharing, since it is run by only one person and the profit is enjoyed only by one person. Whatever he is enjoying, it is solely of the one person. So there is no source of no separate income tax filing is required. And return tax detected as source complaints, and there is no certain limit up to certain limits. And GST complaints, and it is applicable to all, to same rule is applicable to all structures. That is, if the aggregate turnover is above ₹40 lakhs, then the organization has to register under GST. And in case of services, it is up to 20 lakhs. And in special category state is for service as well as the goods, the aggregate turnover should be up to ₹10 lakhs. So except reverse charge. So reverse charge is different from normal levy. Under normal provisions of GST, the recipient, the buyer of the goods will make payment that includes GST for the goods bought by him to the supplier, and in turn the supplier will deposit the amount collected as GST with the government. But whereas this is under normal GST, but whereas under reverse charge mechanism, the supplier will collect only the payment. The recipient, who is the buyer of the goods, will make the payment only for sales, and in turn he just pay directly to the government the amount of GST. The amount of GST will be paid directly to the government by the buyer. Here, no way the supplier will pay to the government. This is what reverse charge mechanism is. Next is payroll complaints. Payroll complaints is having same rules in all structure. So labor laws, each and every organization should know about the labor laws and what are all the things, that is payroll, how to record giving of salary to their workers. That becomes very important. And books of accounts to be maintained is no under sole proprietorship, And secretarial compliance, there is no, because only under company we will go for secretarial compliance. Next is about partnership. So sole proprietor process. What are the process of acquiring sole proprietorship? So you have to decide the trade name. Trade name is one which you are going to do all kinds of business transactions, and do one registration like store, shop and establishment, GST, etc. So registration you can do at least, you can have at least one form of registration. It may be a shop or establishment or GST, and open a bank account. And open a bank account. So opening a bank account is required. So whatever the income and expenditure statements, or whatever the all kinds of dealings related to business can be done opening a bank account. And for opening a bank account, no separate PAN is required, because as the sole proprietorship is, as I told you before, it is just one man army, and that person is solely responsible for the income tax also. And there is no separate PAN required, because he may obtain PAN already under his name. So sole proprietor business concern will also be under his name, under his control. So no separate PAN is required. Next is, it is the easiest way to start up with least complaints. So there is no there is no complicated legal procedures in establishing a sole proprietorship firm, and it becomes a very easier way to start up business. Next is partnership firm. So partnership firm that comes under unregistered structure. So partnership firm is when two or more persons come together to join to form a business with the aim of making profit in an agreed ratio, with the aim of sharing profits and losses in an agreed ratio. So what are the advantages is, two and more individuals share cost and responsibilities. So when two or more individuals join together, the cost of business as well as the role and responsibilities of each and every person will be shared up. There will be a sharing role in their responsibilities. And terms of partnership recorded in partnership agreement. So what is the term of partnership? Maybe partnership term may end. The period of partnership may end, maybe for 2 years or 3 years, or it may end after a certain period. Next is silent partner concept is also applicable. So silent partner concept, you can bring a silent partner inside your organization, where that silent partner will not be concentrating on any working of the partnership, any activities relating to partnership, running of partnership organization. So instead, he will be just contributing his capital to silently enjoy the benefit, enjoy the profit made. And the partnership firm is easy to set up. And what are the disadvantages is, he is liable for the action of other parties. Even if the other partner has committed any wrong, any mistakes, the rest of the partners becomes solely responsible, and they will be held responsible for the misconduct of one partner. Unlimited liability. It is not restricted to the capital of the legal entity, since it comes under unregistered firm structure. So there is no limited liability. Partnerships can contribute any amount of capital that may bring more profitability, and in case if they incur loss, the ultimate liability for loss is put up to them. And benefit of slab rate taxation is not applicable in case of partnership. Next is partnership firm compliance, and separate income tax return is required, since it is not like sole proprietorship. It was joined, it was the partnership firm is an association of two or more persons who have agreed to share profits in an agreed ratio out of business run by them. So there will be two or more persons. So separate PAN is required. And separate income tax return have to be filed for. So under sole proprietorship, if only one person is running the organization, and he will be his income will be raised only from that business. So separate income tax return is not necessary in case of under sole proprietorship. But when it comes to partnership, separate income tax return is required. Next is TDS compliance. There is no TDS compliance up to certain limit, and GST compliance is the same in all structures. The same rule is applicable in all structures except reverse charge mechanism. So payroll compliance, it is also the same rules in all structure, and books of accounts required to maintain. There is no necessary to keep all the transactions recorded, and it is no compulsory to record all the transactions. So book of accounts is required to maintain as no, and secretarial compliance no. So what are the process of partnership firm? So you have to draft a partnership deed. Partnership deed is what is the name of the partnership firm you are going to run on, for the partners, what are their role and responsibilities, and how much profit they are going to, how much capital they are contributing for your organization, and how much profits they are going to share out of it, and what are their important roles, and what are the other documents to be running, and who is the active partner and who is the silent partner. Everything should be given in partnership deed, and print on stamp paper to execute by partners. All the partners should have signed on partnership deed, which can be printed on stamp paper, and partnership firm has to apply for separate PAN, and they can open a bank account only in the name of partnership firm. So partnership firm, a single partner's name cannot be given for opening a bank account. So it is a collective organization. Definitely, partnership firm should be bank account should be opened only by the name you given for partnership firm. Next is limited liability partnership, which comes under registered structure of organization. So limited liability partnership, there is no limit over the number of persons joining in the organization. But what are the major advantages is liability of the partners is limited. Liability capital is limited to certain extent, which was given by the which was given by the government. And what are the advantages is two and more individuals share costs and responsibilities. Terms of partnership recorded in partnership agreement. It is the same as like partnership firm, but only thing is it has to be registered with limited liability partnership. The only difference between partnership firm and limited liability partnership is under limited liability partnership, there is no liability is limited to the extent of capital contributed by each and every partner. But whereas in case of partnership, there is unlimited liability. Liability is not limited up to the amount of capital contributed by them. So next is the next difference is registered with Ministry of Corporate Affairs. So limited liability partnership act, if you are registering your company under limited liability partnership act, it has to be registered with Ministry of Corporate Affairs. Then they will be issuing a certificate of incorporation, and then only you can commence your business. So perpetual succession. That is, even if the partners die, if any one of the partners die or become insolvent, we can't close the firm. The firm exists forever. But by giving new partners, by adding new partners, by admitting new partners to the existing organization. Next is disadvantages is benefit of slab rate taxation is not applicable. So you cannot enjoy any kind of taxation from that. More legal compliance required than simple partnership firm. So when you go for registering with Ministry of Corporate Affairs, definitely that will be legal documents where you have to approach, you have to contact the right person for executing all the affairs relating to all the work related to incorporation of your organization. So more legal compliance is required when compared to partnership firm. And regular and annual filings with Ministry of Corporate Affairs applicable same as body corporate. That is, as like a company, You have to go for regular and annual filings. What is the income tax? What is the profit earned by your organization? And it has to be get audited under MCA, that is Ministry of Corporate Affairs, which will be required after some milestone, say after 3 months or 6 months after obtaining the certificate of incorporation. After you start commencing your business, definitely you have to audit each and every statement, each and every transactions that has occurred inside your business premise, and it has to be recorded and it has to be recorded. Each and every transactions of your business should be recorded and should be get audited under Ministry of Corporate Affairs. Next is, so limited liability partnership, what are the compliances? Legal compliances, separate income tax return is required. TDS compliance, yes, it is required, and GST complaint, and it is the same as applicable under partnership firm and sole proprietorship, except reverse charge. Payroll complaints, same rules in all structure, and books of accounts required to maintain, yes, and secretarial practice, yes. So you have to appoint a secretary for your organization to check whether to give important advice relating to legal matters of your company, of your organization, of your partnership. Next is, what are the process of limited liability partnership? You have to reserve the name of LLP with Ministry of Corporate Affairs. So you have to register your name, legal name with Ministry of Corporate Affairs. They will check in case if there exists any kind of name. If there exists the same name, you have to give a different name after the announcement, and within the stipulated period, you have to give for another name, and you have to go for apply for digital signature of partners. So in case if you are making transactions online or through email, definitely you have to obtain digital signature and draft a partnership deed. Partnership deed as like partnership firm, it should contain the name, address of all the partners, what are their main role and responsibilities, how much for capital they have contributed, how much profit they have agreed into, and where is the unit located, where is your firm is going to located, and where is the head office. Everything should be the date of incorporation, everything should be recorded, and it all should be printed on stamp paper to execute by partners. So all the roles and responsibilities along with the other partners roles and responsibilities, everything should be printed on a stamp paper, and each and every partner has to have to sign in that document and file documents with Ministry of Corporate Affairs and wait for registration certificate. So once if all the partners have agreed to register the name of the organization, name and address as per partnership deed, content of partnership deed, it has to be, the documents have to be filed with Ministry of Corporate Affairs, and the firm has to wait for a period for obtaining registration certificate, and then they can go for apply for PAN under the name under the legal name given for their limited liability partnership firm, and then they have to go for opening a bank account in the name of partnership firm, where all the transactions relating to their business happens online, happens through bank. Next is private limited company. So company is a separate entity which have a common seal and perpetual succession. Perpetual succession is it exists forever, even if the members of the company dies. So what are the complaints applicable is separate income tax return. Yes, there is a need for separate separate income tax return, because all the profits earned by the company is not that is does not belong to single person or does not belong to a group of persons. It belongs to group of members. TDS compliance, yes. So you have to go for checking the TDS complaints, tax deducted source. So what are the kind of out of tax deducted source may be deducted, maybe the income tax deducted for rent, commissions, salaries, etc. And GST compliance, same rules in all structure except reverse charge. And payroll compliance, Same rules in our structure. And books of records, books of accounts required to maintain? Yes. Secretarial compliance is also yes. So that is when you want to go for dealing with financial matters or expansion, diversification, definitely you have to, or any legal procedures you should have. You should have a company secretary where the secretary can, where the company secretary will give you an advice related to that. Next is types of shares. So each and every organization needs finance for raising their capital. So types of shares, there are two types of shares. One is equity shares and the number two is preference shares. Equity shares, they are the real owners of the company and they are the real gainers because they will be getting a payment of dividend and they have voting powers and they have control over the management of the organization. And the other side is, if you concentrate on the other side, they are the real gainers as they get payment of dividend at the right time. And that will be an increase in their wealth, increase in the value for the amount contributed by them as an investor for the organization. Since market price, if when the market price of the organization increases, definitely the value of the wealth get maximized. So equity shares, it is also called as common stocks in some countries, and having equity and having voting power and no preference. So in case if the company incurs loss, they can't claim dividend for the period of from the company for the period of loss. Only if the profit is, if there is adequate profit, and after making payment of interest to the debenture holders or outsiders and preference shareholders, after making payment of dividend to the preference shareholders, they will be given they will be given the amount of dividend. Next is preference shares. Preference shares should be compulsorily convertible. In case if they agree to convert preference shares into equity shares, it can be done. And preferential rights, as their name says, preferential rights. Preferential right is for claiming over dividend. In case if the company has incurred loss in the previous year, and that previous year, that period, that they then get the amount of dividend, they can claim dividend in the period that the company has incurred profit. So arrears of dividend, it will be named as an arrears of dividend, which will be paid to them in the near future. And the other preferential right is repayment of capital. So repayment of capital is at the time of liquidation of the firm. So it is the first preference given to them for making repayment of capital to them. Next is part of cap table. Part of cap table is how much present shareholders are served by the entire securities, the entire portfolio of securities. So when it comes to security, that is shares, that will be equity shares, preference shares, and outsider securities. It will be debenture holders, bonds, and loans from financial institutions. So they must be given the first preference. So we have to see whether how much percentage of shares, how much percentage of owners equity, as well as outsiders fund as combined over. That is what cap table says, capitalization table says. And how much percentage of shareholdings made by an investor in an organization. Next is what are the procedure for incorporating a company? For incorporation of a company under partnership firm as well as under private limited company and public limited company, both are same kind of process. First thing is you have to go for checking trademarks. Trademarks, after checking trademarks, you have to go for, that is, the trademark should not have been obtained by any other persons previously. So you have to go for checking with trademarks and you have to reserve the name with Ministry of Corporate Affairs. So only then you can start the company in the name of the company you have given for. If the name reserved for your company is given by some other person, then you have to go for changing the name of the company. Apply for digital signature of all shareholders. So each and every shareholders who have contributed who have contributed in the form of investment for your organization should have obtained digital signature, and all transactions and all the letters, documents sent via using internet post, it should have digital signature, and it has authorized digital signature, which will help in preventing fraudulent actions. And file the application with Ministry of Corporate Affairs, that includes memorandum of association, article of association, ID, address proof, etc. So you have to file application before starting up a company. When you go for incorporation, you have to file the application for forms, and that application should include memorandum of association, articles of association, company ID, address proof, that is who are the directors, who are the promoters. So all the members under company should have included in that. And Ministry of Corporate Affairs will check everything, and then they will be issued the certificate of incorporation. After receiving the certificate of incorporation, you can go for commencing the startup of business. You can go for commencement of business, and PAN and TAN will automatically allotted along with certificate of incorporation.
Ma'am, directly click on the next slide.
Yes, sir. Yes, sir. So PAN and TAN will automatically allotted along with the certificate of incorporation. Next is, what are the next few steps after incorporation is, you have to open a bank account. You have to transfer initial capital as per commitment in memorandum of association. Next is, file business commencement certificate with Ministry of Corporate Affairs. And now the business can be initiated, and directors can bring funds to the company as directors loan. So you can raise capital by issuing by making issue of shares, debentures. You can call for debentures, and you can raise loans even from the directors. Next few steps is, you can apply your company registration is under MSME registration, ODM registration, and register the entity with Startup India. So if your product aims to bring solution to the immediate problem facing the society, you can go for registering a entity under with the Startup India, and you can file form 2 with Startup India for angel tax exemption. So if your company is a startup company, you can go for registering your company under Startup India, and where you can claim tax under angel tax exemption. So it can be filed at the time of fund raise as well. So in case if you want to raise fund and file form 2, you can fill it off, which will be with Startup India for gaining over angel tax exemption. And in case you expect a lot of GST on vendors payment, you have to go for GST immediately instead of waiting for threshold limit and all. You can go for filing, and if the aggregate turnover does not exceed rupees 40 lakhs, you can just file. That's enough, and you need not make payment of GST to the government. So labor law registration is applicable as and when applicable. You have to go for registration, labor law registration also. Next is, so important. These were the important agreements for incorporating a company or incorporating the legal structure of a business. And these are the ethical steps to go start up a business. It's a founders agreement. There should be an agreement between the founders and co-founders. Contract with client and vendors. So who are the vendors? Who are going to sell raw materials for your organization, and what form of relationship you're going to have? What is the payment tenure you're going to make to them, and contract with the employees. So here comes employee-employer relationship. What is the amount of salary you're going to pay for them? And in case of resignation, what is the formalities you're going to do during the time of resignation, and during the time of at the time of retirement? Non-disclosure agreements with the employees and vendors. So some agreements will not be disclosed. So what are the things that should not be disclosed with employees and vendors? So privacy policy for website. So what is your privacy policy for your website? Terms of use for website, software development agreement, and software licensing agreement. If any other person is going to use your software, what is the licensing agreement that exists between the provider, that exists between the seller and the other partner? And finally, I conclude these are all these legal steps required in starting up an organization, in establishing an organization. So you have to decide based on the criterion that is that will benefit for your organization. So there are two types of registration, your structure of business. One is registered structure, the other one is unregistered structure. So registered structure consists only of limited liability partnership and company. An unregistered sole proprietorship and partnership firm comes under unregistered structure. And there are more benefits when compared to unregistered structure of business when compared to structured business structure. That's I conclude. And thank you for the wonderful opportunity.
Thank you, ma'am. Thank you so much.
Yes, sir.
Thank you so much for a
Sorry.
wonderful session.
Yes,
I
sir.
think the entire legal structure was very well stated in the entire session. I've been talking about why, when, and how you have to incorporate. Then you have been talking about the compliance applicable on businesses in terms of the sales, then payrolls, and then other expenditures. And I'm really happy that today the viewers will be knowing more about the sole proprietorship, the advantages, and you have been talking in different domains in terms of different unregistered and registered forms, in terms of the compliances, their processes, their advantages, disadvantages, and different forms of agreement which were talked in the last. I think it was a very wonderful session, ma'am. Thank you so much for giving us your valuable time. And we are
And
looking
thank
forward
you.
for more fruitful collaborations with you.
And
We have a
thank you,
handful
sir.
of the students who are looking for this opportunity in terms of their doctorates and MPhil. So we'll be getting in touch with you in that regard also. I hope you won't mind in getting our students also under your guidance and supervision.
Yes, sir. Thank you.
Thank you so much, ma'am. Thank you all. Wish you a very happy day. Thank you so much, ma'am. Thank you so much.